Moving on to year-end tax planning. The time to effectively plan for your tax is between now and December 31st for 2017. Don't wait until you have to drag your papers to some accountant in February of next year, because that's not going to help. The die will already have been cast. As I said earlier, it's nice to be able, if you can, to spread out your income. Let's suppose that you have a very large spike in your income. And maybe it's because of your company's stock got bought out, and now so you have a very, very large amount of income that may be subject to some tax. What can you do to bring otherwise those taxes down a bit? You could think about donations, deductions that you otherwise would have taken in a future year, or 2 or 3. You might want to accelerate those deductions into the current year. Again, maybe you donate to charity and you give a few dollars to charity every year, so maybe you might want to make 2 or 3 years worth of deductions to that charity this year rather than waiting. Maybe you want to look at the California state income tax that might be due on this money, and you might want to pay that before the end of the year if that would save you money. You have to do some calculations to see whether that would work for you or not. One interesting thing in the charitable domain is something called a donor-advised fund. And so what you can do, again, let's say you made it big. You've got congratulations, say $200,000 bonus or something has happened to trigger a $200,000 income event, and you're thinking, okay, I would like to set aside, I might be able to set aside 4 or 5 years of my charitable deduction budget. Maybe I would like to set aside money, but I don't want to do it all at once. I don't want to give a charity all this money now because they'll think that I'm really, really hot and that I'm going to give it to them every year. And besides that, I lose control of my money vis-a-vis that particular charity. Once it's in, right? So you can give money instead to what's called a donor-advised fund. Many of the brokerage houses have it. Schwab has it. Fidelity has it, and others. And what you do is by giving the money to this donor-advised fund, you get a tax deduction for it immediately in that year. And then over a period of time, you can call up the fund and say, hi, I would like you now to give money to Sierra Club or whatever other charity that you want. You can dictate to them what charities you would like to support and how much money of your money can now be applied to. You do not get a second deduction, but what you've done here is you've managed to create a very large charitable deduction in a year when you needed it, as opposed to waiting to some year in the future. So you might think about something like that as part of your year-end tax planning. And again, always make sure that taxes are paid.